Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Ehrlich, director of research, digital assets at Forbes Crypto, to discuss if Binance will be another FTX, the Ethereum merge, and Bitcoin on track for a down quarter. Stephen, it's great to see you as always. We've got a lot to get through today, but I want to start with the FTX trial that starts next week. What's the significance of this? I think this is going to be one of the more interesting things to watch in the crypto space.
Right, Jill, and thanks again for having me. The trial is going to get a ton of eyeballs. I know basically every financial publication, crypto publication is gearing up for coverage, and it's easy to see why. I mean, Sam Bankman-Fried was the cover boy for crypto for a long time, the white knight, the savior, until it all calamitously kind of fell down about a year ago at this point. And then for last year, everyone in the industry has been sort of waiting with bated breath to see what's going to happen. Is there going to be a plea deal? Is he going to plead guilty? Is he going to go to jail for the rest of his life? So on and so forth. So that's all going to happen. I'm excited because there's been so many competing narratives, and I've spoken with Sam on multiple occasions too, and he seems earnest, but obviously there's another side to that based on everything that's come out, and hopefully a trial will be a good opportunity for us to dispassionately get the evidence and figure out exactly what happened. That's it. I think the bigger question too is, what does this mean for crypto long term? A few things come to mind. I mean, for one, I think the market has kind of recovered from the SBF dip that occurred at the end of last year, but that came at the very end of already a hellish 2022, and crypto is still kind of mired in this crypto winter that has yet to thaw. We have to kind of see what happens there. I'm also still, it also kind of still sort of shows how far we still have to go from a legislative point of view. I mean, if you remember some of the hearings that happened last winter in the aftermath of this collapse, there was all this talk about legislation regulating the space, so on and so forth. And we're a year away, and Congress looks like it's probably going to shut down. The government's probably going to shut down next week for who knows how long, because Congress can't agree on a spending bill. And there are too many to count crypto bills sort of still languishing in the legislative bodies. And that's sort of what we really need for this industry to move forward. So the fact that it's been a year and there still is no, although there's lots of good drafts and there's been some progress, but there's no bill, I think is disappointing to some.
Yeah, Stephen, I would agree. And I'm really interested to see the strategy that his defense team is going to come forth with. I mean, it makes you wonder, well, you know what? There are no guardrails in place. There is no regulatory framework or legislation out there. What do? You know, plead ignorance? I didn't know that I couldn't do this. I'm really curious to see how that plays out, or if he doesn't say too much, right, and almost dig a bigger hole than he necessarily has to. So I'm really curious to see the strategy they're going to take. Let's move along and talk about Binance for a moment here. It's facing a torrent of bad news. Do you think that has the potential to be another FTX?
Right. So this is sort of the next question that everyone's having, because, I mean, CZ was the first investor in Sam Bankman-Fried. CZ appeared to, at least for a moment, be Sam Bankman-Fried's white knight back in November. And look, Binance is facing a torrent of challenges, executive departures from the compliance office, strategy officer, country, regional managers, SEC and CFTC suits that are pretty damning in their own right. And then just this crypto winter that is just causing trading volumes across any exchange to plummet. And that's what brings in the revenue. So, I mean, Binance is really facing, I think, the most tenuous moment of its brief history. Now, the real question is, okay, well, what does that mean? Even if Binance is a fraction of itself or goes under, that's not necessarily a problem for crypto. Yes, there will be a thinner order books. There could be more liquidations, but the real question is, has Binance been doing bad things with customer funds in a manner akin to what FTX did with its FTT token, and also the way that its hedge fund Alameda Research appeared to raid billions of dollars of customer deposits? Because that's what really caused this calamitous set of cascading circumstances to balloon up. And right now that's what we're trying to figure out at Forbes and plenty of other places. I know my colleagues and I have reported several times in the past this year about times that CZ and Binance has sort of raided customer funds and collateral for other purposes. I know that especially in the SEC suit, they talked about how certain funds were used to facilitate watch trading on Binance US, and those are the types of things that could really get the exchange into trouble. But that hasn't quite been proven yet. But it's a natural question to ask given everything that's happened with FTX.
Yeah, it's a great point that you make, Stephen. Regardless if there's guardrails in place or not, commingling customer assets, I mean, it's kind of 101 in the world of trading and managing an exchange. It's been a year since the Ethereum merge, right? Was it a success in your opinion?
That's a good question too, and it depends on how you define success. Yes, it was a success in the sense that Ethereum did switch from a proof of work to a proof of stake blockchain. Its energy footprint dropped 99%, and everything kind of went off. I know back a year ago when we were talking about this, I likened it to changing a car engine while it's going 60 miles an hour down a highway. That all worked. Then in April, they put in another upgrade, dubbed Chapella, which then facilitated withdrawals for the billions of dollars worth of Ether that had been staked on the network since staking began on what they called the Beacon chain back in December 2020. And that also went off without a hitch. That said, I just wrote a report on this. That was successful, but if you're talking about what it meant for Ethereum as a whole, I mean, some of the metrics I look at, like active addresses, transactions, total addresses, a lot of those things have remained the same. And there's two real reasons why. One is, again, this crypto environment. I mean, NFTs are down, DeFi is down. I mean, everything is down. So, but then on top of it, the platforms that have been really growing are like the layer 2 platforms that support Ethereum, such as Optimism and Arbitrum, and now Base, which is run by Coinbase, and that's siphoning off some of the revenue, some of the transactions. So it's a little bit of a yes and no thing. The other point worth keeping in mind too is that one of the reasons why Ethereum wanted to move away from proof of work was due to concerns about centralization of mining, because it kind of favors the better finance, the more well-endowed miners. And when it comes to staking, there are some elements of centralization creeping in again, especially with a function called liquid staking, which is kind of like pooled staking, and Lido, which is the biggest liquid staker out there, I think controls something like 31 or 32% of the total validators on Ethereum. And the higher it gets, the more cautious investors need to be. So successful technically, yes, but I think it remains to be seen how successful in the long term.
All right, let's wrap up here with Bitcoin. It's on track for its first down quarter this year. What does that mean?
All right, so Bitcoin actually had a pretty good start to the year despite a lot of the big headwinds. I mean, we talked about it in January. It sort of surged for no real apparent reason other than I think it had a really bad end to the year. In March, it surged again with the banking crises, which kind of like reinforced the value proposition, the intrinsic value of Bitcoin. Then in June, with all the hype about the BlackRock spot ETF application, and so on and so forth. But it did kind of languished for most of the summer, and then it dropped after the Fed decided to hold rates steady in last week, and kind of give out expectations of at least one more rate hike through the end of the year, because I think there's just a general kind of malaise out there, and I think a lot of investors are worried about whether or not the Fed's really going to be able to execute this soft landing.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.